Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and the market's reaction to it. And Phil, what's interesting with economic data headlines, they might be shocking when you initially look at that, but they're a little bit better if you get into the details.
Yeah, especially some of the revisions we saw in the last couple of days. If you look at the GDP data, it was revised down a little bit, but actually the sales numbers were revised up. So there's actually a lower fall in sales. And that's kind of in line with some of the durable goods orders data that we saw yesterday. The actual durable goods spending ex transport, which has obviously been hit by airline shutdowns, was only down 7.4%. So not as dire as some of the 50% shutdown, the business numbers we've been looking at, 50% reduced hourly working numbers we were looking at. And it looks like it's filtering through into the unemployment too. So although we still see like 20 odd million people with unemployment benefits, that's actually down from 24.9 million. So it's the first time we've seen the unemployment rate probably peak and start to come back down. The estimates sort of show it at 14.5% from the high of about 17%. But again, it's an ugly headline number, but it's heading in the right direction now.
And another big theme this week has been value and small cap bouncing off their lows, and whether it's a longer term trade or trying to catch some falling knives here.
Yeah, I mean, we talked about this yesterday, just how in the past week, small cap has outperformed. In the last couple of days before that, the value indexes had outperformed, and they were being traded pretty actively by ETFs. Just to put it in perspective, you sort of look at those two styles or factors actually got sold off the worst during that March sell-off. So although they're starting to outperform now, it's not like you've seen them actually beat the market in the longer term. These two factors are actually still the worst two performing factors. You can see growth, and we've seen this with the Nasdaq 100 performance as well, is back pretty close to where it started the year. So growth indexes, new economy stocks have been well positioned for COVID and for people working from home and for online deliveries and things like that. The broader market is still down, although not that much, as we've talked about, where the valuation is rich. These two styles, value and small cap, were pretty beaten up. They tend to have old economy stocks. And so when there's news that people are going back to work and starting to do old economy things, it makes sense that they have a bit of a catch-up trade as much as anything.
All right, and let's look at our next couple of charts here with an update on COVID case count, as well as being able to quantify the death rate.
Yeah, the case counts in the US look like they are definitely trending down, which is great, because for the first few weeks of the peak and post-peak era, it wasn't quite sure that we would get the whole US caseloads to go down. But what's interesting is the emerging markets now are starting to increase their case count. Brazil and Russia are now number 2 and number 3 in total cases. So they've passed all those European countries like Italy and Spain and the UK that were in the press so much last month. And you can see Brazil is nowhere near getting the new cases under control. They still see exponential growth. They're getting close to 30,000 cases a day, which is where the US got to at the peak. So for a smaller country, that's not great news for Brazil. It's actually starting to impact steel prices because Brazil produces a lot of iron. And obviously the manufacturing is being hurt by people that are sick in Brazil with coronavirus. Russia, on the other hand, does look like it's got its initial wave under control and it's flattened the curve. So it's kind of interesting knowing all that, just to look at how different countries have experienced COVID. I mean, a lot of people have said, maybe it's not much worse than the flu. And we've talked a couple of times about how the data proves that it is worse than the flu. There's a chart here that just looks at the excess deaths above normal levels across a bunch of different countries. And you can see here, the European countries are far and away worse than the US. Although maybe that's also because they experienced the wave of coronavirus a couple of weeks before us. And we know it takes 3 to 4 weeks for the symptoms to show, for people to end up in hospital, and for COVID to actually either recover or cause mortality. So in a couple of weeks, it's possible the emerging markets will catch up. The US might still see an increase in the deaths per million people, but it kind of puts in perspective but COVID is definitely a unique and additional cause of risk to people's health.
All right, let's end the week on a positive note here. Good for renewable energy, not too good for coal, but we're certainly seeing the impact on the environment.
Yeah, there's been some interesting stats about how COVID has been good for the environment. There was some satellite imagery early on showing that the air pollution in China decreased massively while they were on lockdown. And a lot of people were actually using the air pollution measures to see how much production they'd fired back up and whether they were a V-shape recovery or not. There's been statistics showing that the global pollution levels and emissions are down about 17% because of all of the global shutdowns. So that's all good for the environment in the short term. But this chart's kind of interesting because it shows it's actually been a much longer term trend away from coal and into renewables, which renewables look like they've actually now passed coal in terms of the energy consumption that they're involved with. So that's a multi-year trend, and it's probably really good news for the environment.
All right, Phil, thanks so much for joining me.
You're welcome, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.